Well, there is some new data tonight from the Bureau of Labor Statistics showing that inflation is cooling to its lowest level in nearly 2 years.
But as we know, those prices are still high. NBC's Alice Barr breaks down the numbers as the Federal Reserve weighs whether or not to raise interest rates once again.
Good evening, Faith and Jennifer. The inflation picture is much better than it was last summer, but prices remain uncomfortably high, keeping the pressure up on the Federal Reserve to keep cooling the economy.
Reassurance today that sky-high prices are headed in the right direction as inflation cooled to 5% year-over-year in March, down from 6% in February. It's the 9th straight month of easing price growth on an annual basis since a 9% peak in June.
July, August, September, October, November, December, January, February, now March have been lower.
Grocery prices ticked down 1/3% from the previous month, with bigger drops in items like eggs that had soared to record highs. President Biden saying, quote, "This progress means more breathing room for hard-working Americans."
Jobs are going up. Wages are going up and inflation is coming down.
But prices are still way too high, with housing costs continuing to wear on Americans. A new CNBC Momentive survey finds that 70% of those polled are stressed about their personal finances. The biggest factors include inflation, economic instability, interest rates rising, and a lack of savings. More than half said they had no emergency savings. The latest inflation data indicates the Federal Reserve's aggressive interest rate hikes appear to be working to slow the economy, leaving investors hopeful those rate increases may soon be done. Though with inflation still well above the Fed's 2% target, analysts expect at least one more small hike next month, meaning an even higher cost of borrowing for consumers waiting for signs of hope in the economy to bring real-world relief. In Washington, Alice Barr, NBC News.